Well, welcome everyone. Thanks for signing on. Nick, how's it going?
It's going. It's going. I'm excited to kick this off.
Awesome. All right. Well, I got the recording going, so let me pull back my screen share and we'll get going here again. So, welcome to week one of the secret to not only surviving, but thriving in any economic cycle. And as if you've seen any of our other trainings, you'll notice that we like to start with a quote of the day. And the intention of this quote is to really encapsulate one of the main themes of the training for this week. And it's one of my favorite quotes and probably one that I reference, top 5. And it's every system is perfectly designed to get the results it gets, from W. Edwards Deming. And it's so true. Oftentimes we're just fighting against the outcome. But what we don't realize is that the system that we've constructed is perfectly designed to get the outcome we're currently getting. And so what that inherently means is that we have a choice. And that choice is that we either have to change the system or we have to change the inputs if we want to get a different outcome. So think about that, process that, journal about that as you go on in the upcoming week about outcomes that you're getting and whether or not it's the system that needs to be changed or the input that needs to be changed. Nick, anything you want to add on to this? We've talked about this specific quote ad nauseum in all of our different programs.
Yeah, so many times. I think you said it well. I think there's just a realization that sometimes people, there's a slight variation in what they're trying to accomplish, which I know we'll talk about. And we'll get into how we kind of came to discover these things. But there's slight variations in where you're at and where you want to be. And sometimes we take a system that maybe got somebody else from where they're at to where they want to be, and we haven't adjusted the inputs, right? It's like taking somebody else's MapQuest directions and going up, got the system to get to where I want to be. And so just to zoom out every now and then and remember that this particular system was engineered perfectly to get from A to B, given the current or given the circumstances at the time, right? Even back to MapQuest, one of the one-way roads may have changed directions, right? So there's just this constant coming back to understanding that the system's perfectly engineered to do what it did when it did it and what it's doing right now. Which just great reminder, great quote. I hear you say it all the time and appreciative for it.
With that, let's do some introductions. So I think everyone who's here live right now, they know me from the BDC group, Black Diamond Club. And in that group, I'm sort of known as the tax guy. But I was sort of the cliche kid growing up, scheming on business ideas and my parents trying to rein me in. And really, I spent the first 10 years of my career in capital markets, derivatives, hedging, institutional investing, structured investments, up to $100 billion in assets. And then I spent the last 11 years or so focused primarily on growing my CPA firm. But between the two of us, we have somewhere, I haven't kept track of all your entities, but between the two of us, we have somewhere around 15, 6, 7, and 8-figure businesses. So CPA firm is my main thing, but really I like to think of myself as an entrepreneur at heart. And for a lot of my career, I have been in sort of the investment, again, capital market space. And a lot of that plays into the way that I think about tax planning, the way that I think about entrepreneurship, so on and so forth. In fact, in 2019, and you know this, Nick, 2019, middle of the year, I said there was going to be a recession in 2020. And you got to watch everyone tell me that I was an idiot, mostly on the internet. Of course, I didn't know that there was going to be a global pandemic. I didn't predict a global pandemic, but predicted a recession in 2020, put together a whole training program class. Those clients who took advantage of that thrived in early 2020. They didn't have to pivot because they'd already built the foundation. So that's a little bit more about me, but for the group that's here, some of them have maybe heard me mention you, reference you in terms of business partner, and heard me talk about a couple of the tokens in the crypto space that you've put together, and we're partners in the Certainty app and Certainty U and a bunch of other things. But I think for everyone's benefit, if you sort of provide a little bit of your background, Nick. Oh, and you're muted.
I'll give you what I think would be useful. I have a super unique background, very similar to Dan. Dan, unfortunately, got pigeonholed as a tax guy because pre-wired ideas. But there's my first, I've founded and co-founded and sold. I was actually doing the math earlier today, trying to figure it out. About a dozen companies now, and they all have the same thing in common. They're all different industries. The first big payday I got, because I know that's what we're going to talk about, is money. How do we make more money, get more cash? Was from the Florida Department of Health, the Indian River branch in Vero Beach, Florida. The second was from John Hopkins, the head of endocrinology, flew me out to Baltimore. So those are both kind of health related. And maybe more relevant to the people here, Jay Abraham. I actually lived in California for a couple of years because of a partnership with Jay Abraham. Steve Sims and I, super close. When I moved to California, I got super close and did a lot of work together. And the common theme is the people that seek me out in particular and pay well and get results are hard charging, brilliant, typically experts, technicians, like I assume most people here are. They have everything they need right in front of them, and for some reason cannot figure it out. They usually get in their own way. So I've basically built my career up to this point in just learning to talk to people that are way smarter than I am and help them recognize, like, you have everything you need right here, and arrange it in a way that is palatable and efficient. Just so happens that just to kind of come to why we're here now, Dan does that with numbers. And so a lot of what we're doing and talking about in the way that I hope that I could be useful to you guys is kind of figure out, what are you working with? Where are you? Where do you want to be? That's a theme of that I stole from Dan, and help everybody here recognize, and this is just what I've done my whole career, like how straightforward it can be if we just have the pieces that we need. And I think that's over the next 3 or 4 weeks, what we're going to do is get the pieces. And I joined Dan for his Recession Proof Your Business a couple years ago. And I did hear everybody go, recession, that's never going to happen. So I would implore you to just pay attention.
Awesome. Nick's leaving out a bunch of other cool points, like he was a former professional strongman, and a bunch of other neat facts that as you get to know Nick, you'll learn about. With that, sort of get to the essence of things. So do you ever feel like you're not getting to where you want to be? In other words, you're on this never-ending chase. Keep trying all this stuff, doing more and more and more and more and more, but there's this sort of mysterious endpoint that we never seem to get closer to. Why is that? There's a lot of research around why is it that some people win and some people lose? Why is it that some people win and then they later lose? And what is the common elements of it? Because you hear all this stuff about, oh, they just need to take more risk or burn the boats or all these sort of things that sound really good as a bullet point or a pull quote. But in practice, what really actually works systematically? Again, every system is perfectly designed to create the outcome it's currently generating. Most of us have built an entirely fragile system, very, very fragile system. Why? Because it's based off the assumption that and we're going to be able to perform at our peak every day. As if we can run as if we can run a marathon and each day set a personal record. Right? Inherently, that's a flawed system. We're assuming that we're going to operate at our personal best. We do this with money. We go from, it's the rigid chaos model. We go from a bunch of chaos financially to then let's get really, really rigid. And yeah, it gets results, but then it's fragile. We can't sustain this rigidity that we've built. And so at some point, we're going to go back to chaos inherently. Right? Nick, you can share from your time in fitness and working with Dr. Trevor Kashey from a dieting perspective on just the kind of yo-yo dieting that people do because they built a system that's assuming that they're going to operate at their peak on a day-to-day basis.
Yeah, that's the transition from, I thought it'd be way more difficult, and I think everybody else thought it'd be more difficult too, from the cognitive behavior therapy involved in nutrition and fitness and stuff, and coming over to business, like, oh, that's a big leap. I'm gonna have to learn a whole bunch of new stuff. And it turns out the underlying issues are about the same, right? It's that that vacillating, that undulating between chaos and rigidity. In fitness, in health, nutrition, it's called yo-yo dieting. You get super optimistic, line out a plan, and somehow convince yourself, yeah, I could totally follow this. And then life happens, and that's okay. But because we were so hell-bent on this plan, we never even stopped to consider, like, all right, well, what happens if I drop my Tupperware full of lunch in the gravel? How do I adjust? Right? We're so sure we're just going to eat out of that Tupperware every day that there's no, we don't consider the other options. What happens if I forget my food? And we go, F it. Guess I'm not eating good today, and eat a whole pizza instead. Right? That's the alternative from complete rigidity to complete chaos. And coming over to the business world, not knowing all the stuff I know now, just realize, like, oh, same thing. Got this business plan. I'm going to run these ads. I'm going to get these metrics. Boom, I'm rich. Never considered what happens if one of these metrics is off. How do I adjust? It just goes off, and you go, F it, new plan, scrap it all, go to a new event. And there's a huge cost, as everybody here knows. There's a huge cost in scrapping one model and building another. So just chaos, rigidity, chaos, rigidity.
Yeah, so we build a system, and we build a system assuming that we're going to operate at our maximum. We build in all this rigidity, and inherently we build a system that is fragile. Better to build a system that assumes that you're biased and starts at your current baseline and builds from there. Nick, you have this story from your old gym where you had maybe you should tell it, but about some ladies who came in and they weren't working out before. I'll just throw it back to you, actually.
Let me tell you about these women, because everybody listening, I think you'll get it really quickly. Type A, hard charging, super motivated. Before they were parents, they met, I think, in law school, right? There was two sisters and a friend, and I think they met in law school. So that's the kind of person we're talking about, successful, right? And rigid. Finishing law school is not easy, I'm told. So they come in and say, hey, we're ready to get, we've been in school, then we had our kids, and we're ready to get our fitness stuff together. Blank check. I don't care what it costs. Our husbands will pay for it. Don't care what it costs. How many days a week can we come? Can we come 5 days a week? And I said, no, you cannot come 5 days a week. And they were pissed off because they're trying to write me a blank check. I said, you've never exercised consistently before, right? So just do 1 day a week. 1 day a week. And until you can do that, I will not let you do 2 days a week. Won't let it happen because there's no evidence that you can sustain that. I know in a vacuum, you got it in your calendar, but there's no evidence. Took them about 3 or 4 weeks before they could consistently do that. And then we jumped to 2 days a week, right? Let me back up a little bit. They actually walked out because I wouldn't let them exercise 5 days a week. Their husbands came back either later that day or the next day and said, thank you so much. We're ready to pay you. our wives told you or told us what you said about that you wouldn't set them up to fail. So they enrolled, and we went through this whole process, and they ended up finding that at 3 days a week, they were getting to where they wanted to be. And obviously we had the conversation where they had to admit that there's no effing way they would have survived had they started at 5. Right. So oftentimes that ideal to get from where you're at to where you want to be, it's somewhere in the middle. And if we skip straight from the chaos to rigidity, we skip over that ideal. But if we don't provide the evidence, and this is the important thing, like if you're doing something, I'll give you one more example. Somebody says, you need to go live on Facebook every single day if you want to make money. One, that's not true. You don't have to go live on Facebook ever to make money. But 2, I would say do it 1 day a week. And until you can do that, it doesn't make any sense to plan on or expect that you're going to do it 2 days a week. And until you can do that, right? And so on and so forth. And so that's what's missing in a lot of these. Hey, we're going to help you get rich. We're going to help you make money, help you close the gap. There's no establishing a baseline to work from. And like Dan said, that's very, very fragile. It is a countdown to doomsday.
Yeah, the relative change from 0 to 1, we go from 0 days working out to 1 day working out per week. The relative change, right? 0 to 1, infinite.
Yep.
Infinite relative change. So we just think about all the things that we're trying to go from 0 to 1,000. Still an infinite relative change. Right? So we need the baseline data, build a system that is actually sustainable. Right? So at the end of the day, we have to build a system that it represents or acknowledges the fact that we're not robots, we're subject to biases, right? No matter what, we like to think that we aren't, and we're going to somehow overcome all these biases. Oh, well, research. Well, unfortunately, there's something called the G.I. Joe bias that says even if you know about biases, you're still subject to them. And even if you know about the G.I. Joe bias, you're still subject to biases anyway. Anyways, ton of neuroscience on this. Dr. Jeff Spencer, who was at summer camp and a good close friend of us, talks a lot about that in Human Mindset versus Champion's Mind. So with that, what do we actually do? Well, and why are we on this never-ending chase? Well, we don't have a solvable problem. So you don't have a solvable problem yet. And so the consequence of not having a solvable problem is that you're not clear, and I'll explain what I mean by that in a moment. But when you don't have a solvable problem, then you necessarily cannot be clear on the most efficient path forward. How do we get there? With the least amount of moves, with the least amount of risk, with the least amount of effort. That is the most efficient path forward. How do we get there? Well, if we don't have a solvable problem yet, we can't figure out the most efficient path forward. And then fundamentally, what we do as a solution to not having a solvable problem is that we just work harder, do more stuff. But then we're not getting obviously closer to the outcome that we want. So drop in the chat. So who can solve this problem for us? X plus Y plus Z equals 10 million. What is the value of Z? So somebody drop in the chat their answer. So what is the value of Z? Can anybody solve that for us? Right now we've got no comments in the chat. So let's see if anybody who can solve for what is the value of Z. I'll give it another second. So inherently the answer is, well, I can't. The value of Z has an infinite number of possibilities because what do we have? We have a multivariable equation, right? Someone just dropped in. It depends. That's Nick and I love to say, it depends. Because it depends on the value of Y and X. As it stands right now, we have a multivariable equation. We have too many unknowns, so we cannot tell you what Z is. If I said X was 9 million and Y was 500,000, then you could solve for Z. you would know the value. Otherwise, Z is infinite. Now think about your vision boards. Curious how many of you have a version of a vision board, right? That's not a solvable equation. Oftentimes the vision board creates more anxiety for folks, or because there's this felt sense of I have to do more, but it's not a solvable equation because right now we haven't figured out, well, what do we have in resources currently? What are our assets, liabilities? Where is all the money? So what is our current position? Similar to Google Maps, where am I at right now? And then where do I want to be? What's my final destination? And when do I want to reach my final destination? Is that in an hour, 2 hours, 5 hours? And so our vision board cannot be solved. We can't figure out the most efficient path forward because we haven't converted it to a solvable problem, a solvable equation. We have to take each of those items, what I would say, our definition of financial certainty, and we have to assign values, date, dollar amount, when do I want to achieve that item by? Absent that, it's not a solvable problem, and therefore I cannot figure out the most efficient path forward. So what do we end up doing? Well, what we end up doing is, again, assuming that the answer is just doing more stuff. And then we get back into the rigid chaos model. That's false. More is not the answer to everything. Right? If I wanted more time with my family, and I hire a bunch of employees right now, well, on average, each direct report on average requires 4 to 5 hours per week of oversight. So if I go and hire 4 people right now, is that going to free up my bandwidth today? No, I'm going to have additional training and oversight. Long term, it might, but if my immediate problem I'm trying to solve is having 10 more hours of time per week with my family, and I think more revenue, more clients, et cetera, is going to solve that problem, potentially I actually got further away from what I actually wanted. So we have to ask ourselves, fundamentally, is the action I'm going to take going to get me closer to the things that I want? Which means I have to be very clear on what it is that I want. And it has to be part of a solvable equation.
Yeah, there's a imagine just real quick the multivariable equation, because everybody here is smart. You're all Black Diamond people. And I know you guys are familiar with like Jay Abraham. It's really easy to go down his 50 Shades of Jay, right? And go, oh, that's a great idea. Or listen to Steve Sims. He's a good friend, like I said. You go, oh, now I need to be on Instagram. That's a new variable. And in a multivariable equation, you have to understand that when you change one variable, you now have to change every other variable in order to get the same result, right? And so by not defining this stuff, what we're doing is we're basically just chasing around all of these variables, trying to get them to add up to something that makes sense, whether or not it makes sense for us as individuals. That's the big disconnect, is you can make all the numbers add up and then cool, you're on track to get a Lamborghini in 3 years, but what you really wanted was more time with your family. So like you solved a problem, it just wasn't yours. And so these are all the variables and all the things that Dan does so well in getting on paper and turning it into something that we can solve for. And it's going to be individual for each person, which is why I think it's so important to, again, bias closer to what you want, so that you're building a bridge, across the gap, not just like bedazzling a bridge that never gets all the way across.
Yeah, when you get this right, when you nail this, you've created a solvable problem. In other words, your unique wealth algorithm. So if you did the week 0 homework and you went into the Certainty app and you start putting in your priorities, the things you want to fund, that total number of all of those priorities and the gap, we want to figure out what is the most efficient path forward to close that gap. Right? So get there faster with the least amount of effort and the least amount of risk. If you don't know the number and you don't know the timeline, we can't solve for most efficient path forward, and you're likely going to default to the human mindset, system one thinking, depending on if you're a disciple of Dr. Jeff, or some of the thinking fast and slow research, so on and so forth. You're going to default to more, do a bunch of things. Also, the ultimate end game is how do we recapture bandwidth and have less wasted resources? So just for some perspective, so our Infinity clients, these are people that we work, Nick and I work one-on-one with, they are right now easily adding between 10 and 40 million in net worth in very short durations of time. And I'm going to, with less moves, less risk, and less effort, because they're clear on exactly what it is that they want, how to play their game, what their game is. Again, remember, we set these systems that assume that we're going to operate like we're somebody else, or we're going to operate at maximum capacity. So by making it a solvable problem, the path becomes crystal clear. Okay, so let me show you how this all actually works. Because what I like to do is take the theory, Nick sees me do this all the time, take the theory and turn it into a solvable equation. So all the fundamentals and all the action items and great, but I need to be able to, can I convert it into a formula and action steps? That's the way my mind works. Nick, can you see the spreadsheet?
Yep, I can see it. I've seen you do this. I'm
okay.
Just waiting to
so
see everybody
amount
else.
Needed. This is if you did the certainty app, this is the sum of all your, what we call profit priorities. So what is the sum of all of our profit priorities? That is the amount needed. So let's just say that that's $10 million. Okay. We're going to have what we say financial certainty if I can bring in $10 million, because that's going to pay for the boat that I want, the second house that I want, that's going to pay for or allow me to have more free time or retire my spouse. It's also going to fund my core capital. Core capital is the amount of money you need to not have to work. Most of the people in this group, maybe all the people in this group, are focused on not retirement, but how much do I need to not have to work? In other words, you may always do something. It's just having the option to do something rather than having to see a patient, having to add more clients. It's having the optionality. So what is that dollar amount? We have to know that. And then when do we want to fully fund that? In other words, when do we want to have 10 million? So let's just say in months, that's 60 months, 5 years. Okay. Then how much money do we actually have to contribute to funding this priority? And what are we starting with? Now you notice as I put this in, it solves for you what the monthly return is and how that gets converted to annual. Okay. So I want to have 10 million. I have 50,000 now. I'm going to contribute an additional 5,000 per month. And I need to get a rate of return on my capital of per month 7.8%, or annual return of roughly 145%. Okay, so now we've solved for how much more, what is the return that we need to make? Then the question becomes, how can I get there faster with the least amount of moves and the least amount of effort? Right? How can I get this target? Okay. Now, when we add in tax rate, you can see that now if I have to pay tax on all this money, or I don't have an offset to it, then now the rate goes from 7.74% to almost 11%. Okay. Now, what are we going to show you in future classes, jumping ahead a little bit, but we're going to show you how to find more that you can invest. So from your existing resources, how can we find more? And then how can we keep more, meaning get this rate down? Now, this is not a tax focused program, so we're not going to be spending a lot of time on tax strategies, mostly because many of the people in here are already clients, have shared this stuff with you already. But ultimately, it's going to be, how do we actually get these returns with the least amount of moves and the least amount of effort, with the least amount of risk? Okay. Again, many of us are working much harder than we need to because we're not clear on the numbers. We just turn this into a solvable equation. Now the math behind this, this all will be in the Certainty app as well. So you don't need to know all this math. I've already figured out all the equations for you. So now that we know this, we're starting with 50 grand, how do we take the least amount of moves with the least amount of effort, the least amount of risk to get there? Now you might be saying 7.74%, 145% annual rate of return. What are you talking about? That's not possible. I'm here to tell you that most of you are making, or you're in a paradigm where you're making bets. So I think about business and investing is essentially like gambling. We're making bets on our future. We think there's going to be some payoff. Now we don't like to call it gambling because that has a whole connotation to it. You couldn't come home every day and your spouse like, well, how was gambling today? Right? We don't like to signal necessarily that in business we're betting, but really we are making a series of strategic bets. And it's we can't get these outsized returns if we're making bets where the downside is equal to the upside. I bet $1 to get $1 back, or I bet $1 to get $1.10 back. This is very little upside relative to the downside. I'm going to make 10 cents on the dollar that I invested. I might also lose that dollar. So in order to make 10 cents, I put at risk $1. So we're making these bets where there's very little return, or the downside is significantly worse. Right? And we have to change our entire mental model to think in terms of asymmetry. Asymmetry, where we're looking for opportunities where the upside is substantially greater than the downside. Now you can think about right now your favorite people in business, whether Elon Musk or think about all the different innovators that are out there. They are naturally calibrated to identify asymmetric opportunities. Brain just works differently. We're going to give you a few tools that I've developed to try to analyze problems and either manufacture the asymmetry, create the significant upside relative to the downside, or make sure that you're not spending time on those things that are inherently have more downside than upside. Because when we pursue one opportunity, we remove an infinite number of other possibilities that we could have been working on. Time is a scarce resource. Money is a scarce resource. Right? So when we invest in one opportunity or pursue one thing, we're removing inherently an infinite number of other possible things that we could have been working on. Right? So that's a lot of downside, right? I worked on this one thing, I didn't properly vet it, I didn't manufacture asymmetry, and that removed opportunity cost, this infinite range of other things I could have been doing. Nick, is there something you want to add on to that?
I think when you walk people through this, they'll see that it can be manufactured, it can be engineered, and the hope is that I think we'll circle back and talk about this, but the hope is that it becomes clear enough that you start to realize how much time and how many resources are being wasted by not running something through a tool like this.
Mm-hmm. Yeah.
I know I experienced it, and so just I think you walking through the math is just, it's a paradigm shift.
Yeah. So we need a target rate of return of 7.74% per month, which annualizes to 144%. That's just coming from this tab right here, where we put in these variables. I change the variable to 100 grand, that reduces the rate of return, so on and so forth. So this is all coming from that page. And now what we need to do is we need to allocate our resources so that we get a weighted average return that is at least 7.74%, or in this case, we're paying a bunch of tax, but I'm going to simplify this and just assume that you're following our other strategies and you're paying 0% or close to 0%. So we need 7.74. Our expected monthly weighted return needs to be at least that. So how do we do that? Well, now we need to work through what are all of our different allocation opportunities and their expected return. So I'm here to tell you that right now, there are lots of opportunities out there to just get a fixed 8% rate of return, fixed 8%. There's a bunch of opportunities where you can get a fixed 20% return. And then if you put in a little bit more effort, still taking relatively nominal risk, there's stuff out there in the financial space that are paying out 1,418% APY. So step one is to figure out what are our potential buckets that we can allocate to. And then the tool just converts this to your monthly return. We can add in some adjustment for volatility. Not going to spend a lot of time covering that right now. And then we say, well, how much of our portfolio are we willing to invest in these different buckets, and what is the duration? So let me just change the duration for everything to 60 months. Now, because there's this allocation right here at 1,418%, your monthly weighted average rate of return is substantially, it's expected to be substantially greater than your necessary target, right? Which means a couple things. It means either that we can reallocate to things that have less risk, because we don't, if this is truly what we're solving for, we truly only need 10 million and we want it in 5 years, 60 months, and this is what we have to allocate, then we need to be aware of the fact that greed and the desire for more can creep in, and we take on too much risk because we get clouded by, well, I could get 21%. So I'll just put everything there. And then we unnecessarily take on too much risk necessary to what we've defined as the solvable problem. Again, the game is the least amount of moves with the least amount of effort, the least amount of risk.
And this is just point out real quick, because this is where it popped out to me the first time I saw it, is like, this is the power of the solvable problem, is we know, because when do you stop, right? All these opportunities come up, and when do you stop chasing? Like, this is such a powerful gut check. All right, look, if I get 10 million in the next 5 years, I get everything I want out of life. I don't have to chase more. I don't need to go to this event. I don't need to run these ads. I don't need to try this strategy. The problem's already been solved. And that's a huge, huge, huge cognitive burden lifted.
What this also allows you to do is you have an allocation that's going to get you 21% per month. These are real allocations, by the way. This is in our portfolio, mechanized portfolio. We have our own cryptocurrencies. We have Infinity clients that are following these allocations. Like, these are real things that are out there with relatively little friction, doesn't require a whole lot of risk. But what this tells you is, okay, well, right now my portfolio can get me 20.61%. Our portfolio for this month, as an example, is month to date up 98% when I checked it this morning. So what I can do is I can come here and say, okay, well, instead of 60 months, what if it's 36? And I go back here. Okay, so that's still the required monthly return is still less than our target. So now, because I've created a solvable equation, I can change the amount needed. I can change the month, the cash invested, and it's going to adjust and tell me what is the return I need compared to what I'm able to get with the least amount of moves and the least amount of effort. Because there's a gut check moment. You have to be honest with yourself. We call it voting with your money. Are these really what you're working towards? We're being honest with ourselves about our targets, because if not, you're going to keep taking on more risk, or you're going to be unfulfilled by the return that you're getting. So we fill in the targets, allocations. This calculates the expected future balance. Because this return is so crazy, it's going to say that it's going to be 126 billion. Now, we don't think this specific allocation is going to last more than 12 months. That's our viewpoint on this specific one. So the expected future value, in other words, what is 40,000 beginning balance going to be 12 months? It's 2.2. So it doesn't quite get us to the overall target, let me come back to that and show you what that means, practically speaking. So we've entered into these allocations. So this is progress tracking. We've entered these allocations. These are expected return, adjusted return, future balance. Now, as I mentioned, our portfolio for the month is up 98%. We only needed, in this example, if we only needed 7.74%, we significantly outperformed. So say this, I'll just put in, say this allocation number 4 in month 1, because we got so much greater performance than we expected, it's now, just for example's sake, worth $5 million. Well, what does that do? Well, what that does is it changes our required monthly rate of return to 1.1%. So now because of our performance, we need to reduce our risk even greater, which means that I can take this entire allocation and I can move it to something that is 100% guaranteed, like this 20% rate of return. This 1,418% allocation has more risk. It's not guaranteed. There's some fluctuations. This volatility analysis will teach you in subsequent weeks how to analyze it and why I'm telling you that this is inherently higher risk. But the point being is when I outperform, I'm going to rebalance, reallocate these resources to something that is guaranteed. Because what I know is that I only need 1.1%, and I'm trying to take the least amount of risk, the least amount of effort, the least amount of moves. If I can just put the money in one account and not have to think about it, and that allows me to fund all of my priorities within the duration that I've set, why would I not do that? Right? And the answer is because I'm not being honest with myself here, or what we asked you to do in the homework. So
step back for just a second to the allocation, or you could just leave the screen up. But
yeah.
just to point out that what a lot of people are doing is they're very, very close. Closer. Every time I walk somebody through this, they're way closer to being on track than they think. Sometimes they're already on track, but because they haven't defined it, they go chasing a new business strategy, new marketing strategy, new way to generate revenues, a whole bunch of things that are high risk and exhausting. Whereas if they just had defined the problem, it often is like, hey, why don't you just move this money here? Boom, problem solved. And it's that, again, I just point out that's the power of, my guess is, given the fact that it's the Black Diamond crew, almost everybody here is so much closer than probably what even they think they are, and just got to turn it into a solvable problem.
That's right. Yeah. So what ends up happening when we create the solvable problem, we see from the spreadsheet that, hey, we're overperforming. So for us to hit all of our goals, we actually want to take less risk, move the money to something that's safe. We don't have to look at it. And for some reason, we don't do that. Why is that? Right. So the reality is cognitive distortions, right? As I mentioned before, we're all subject to biases, right? Whether we want to recognize that or not. Counterintuitive, let me give you an example. As I mentioned, the first 10 years of my career was in the derivatives, capital markets space. The best traders in the world lock in losses faster. Not gains, losses faster. Because what they realize is inherently, if I've invested in a stock and the value has gone down, statistically speaking, I'm likely to be able to get a return, recover my capital faster in some other investment. Right? So they inherently know I can get my money back. I can get back to break even in some other vehicle, potentially, some other investment. But because of loss aversion, many people are unwilling to do that because then they have to recognize a loss. They have to admit this was a failed investment. Right? The best traders in the world don't get trapped in the initial investment. They use what we call the investor frame, which is, am I willing to buy this again if I had it in cash? Even though I own it now, if I had the cash instead, would I be willing to buy the thing that I already own? If no, I need to sell it. We don't need to continue in a position, continue in a behavior, or continue in a business strategy, continue with an employee that's not working well for us, if we were unwilling to make that or enter into that transaction again. Loss aversion. Nick and I are not particularly impacted by loss aversion, but some of us are. It's a kind of a continuum. Some of us are more impacted by loss aversion than others. Some of us are more impacted by overgeneralizations, all or nothing thinking, so on and so forth. There's 10 core cognitive distortions. You need to know what those are. When it comes to, say, my investment portfolio, and Nick is the same way, we don't have it set up to allow us to transact on our phone. In fact, both of us can only trade on our work computers in our office. We're actually in the same office. So, he's on the other side of, or I'm on the other side of his wall. He doesn't have a fancy virtual background, but we're only set up to transact here in our physical office, which means that on Saturday, when I wake up and I need to parent all weekend and I'm looking for a dopamine hit or some sort of stimulus, I can't do something that's self-destructive and pull up my portfolio and say, oh, that's down, and start manufacturing busy work or anxiety work to sort of fill this space. I've set up the system. Every system is perfectly designed to generate the outcome it's currently generating, to prevent me from counteracting the strategies we've already put in place. Right? We'll talk more about the whole idea of frequency of exposure and how that's going to potentially impact your performance. But we have to acknowledge that we're subject to cognitive distortions. We have to play our own game. Right? It's really interesting to me how we expect that we're going to get outsized results by behaving like everybody else. Or we expect that we're going to be able to, for the rest of our life, pretend that we're somebody else and put on some mask or adopt some completely different paradigm. Right? We have to play our own game. Now, I got some feedback from the homework. Someone asked for a refund because they told me it was elementary. This is elementary stuff. The best traders in the world, they spend most of their time working on their champion's mind, cognitive distortions, playing their game, because they know that it's one move where they violated all of their own principles could cost them millions or billions of dollars. Right? It's like, we have to understand our biases. We have to understand our game. Am I just seeking out dopamine hits here or there? Do I get stuck in the human mindset? How does that impact me? I know that in January, I'm just generally speaking more grumpy than I am the rest of the year. Start of the new year, CPA firm business has a bunch of stuff in January, new year. I also need to pay out bonuses and all that stuff. So I'm just grumpier. Never make a decision in a valley. Not allowed to do anything new in January. I know my game. I also know historically in May, I want to try a bunch of new stuff because we just got through tax season and I'm chasing a dopamine hit. So I'm going to show you how we can recover a lot of cash by understanding the rhythm of your business, because chances are if we remove the 3 to 4, I've done this many times for folks where we look at their profit and loss statement and we go, look, every year you lose money these 2 or 3 months out of the year. And that cuts your profits by 50%. What if we just got those lost months to break even? Well, what would happen if we just got those 3 lost months to break even? Well, double my profits. Okay. Well, can we analyze the rhythms and things that maybe you're doing or business decisions that you're doing that's causing those 3 months to be losses? I know that my patient volume is always low in March. Okay, well, why is it March also the month that you spend the most in marketing and training? Why are you doing that to yourself? You're creating an additional loss. Momentum in business is everything. We need to, if we could convert this to break even, Now we've already established we will have doubled our profits. So often we're running a race against ourselves because we're not aware of our cognitive distortions, the way that we seek out these dopamine hits, that we've designed a system that every year replicates itself. We have the same highs and lows. We'll tell folks, Nick had somebody, a really famous LinkedIn influencer, I won't say their name, but who was talking to Nick about, maybe it was they wanted to blow up their business. And the feedback was, well, do you feel this way around this time every year? Write this down in your calendar. And after a little bit of, we call it a personal archaeological dig, they found, well, yeah, every year in this month, I feel the same way. And the consequence of that is that I take actions that make it worse and dig a deeper ditch. If I could just take that cash and redeploy it, I could close the gap entirely, assuming I'm being honest about what the gap is and the duration. So again, every system is perfectly designed for the outcome it's currently generating. And if you can't get there playing your own game, what's the point? Why play someone else's game? Nick, what do you want to add on to that?
Just that last bit there. First of all, just the knowing yourself and the journaling, and we have a very advanced program that's very, very expensive. And at first, people are like, "Oh, we're going to have to journal? That's stupid." And they come back and they're like, "Hey, this journaling is messing me up emotionally." Like, yeah, well, not journaling is costing you a lot of money. So either reconcile that stuff and make these connections and deal with your dissonance, or keep losing money. So it may be counterintuitive. It's a really powerful thing to do. And the last line there is, if you are here, right, that means you came through Black Diamond, you paid, you're still here. This is resonating enough for you to sit here this long. I am almost certain that you can close that gap if you're willing to define it by being yourself. Dan always says, eccentric billionaires, they were just weirdos until they were billionaires, and then now they're eccentric. Now it's endearing, but there's something in them that understood who they are and what their game is, and they just give zero cares about what everybody else is doing, and that's a lot of times why they get to the top. But if you can use this tool that Dan just showed you, we're gonna break down over the next couple of weeks, and it becomes clear to you, like, whoa, I can make way more, and it's way easier than I thought it would be, which is going to be another, human mindset versus champions mind. You're gonna have to fight the urge to make it more difficult than it needs to be. But once you see it, and this is what I hope that we get to, is like, then you start looking at other influencers and other business owners and other strategies and tactics and all this stuff, and hopefully you can realize, like, I'm already on track. Being me already gets me way more money than I ever thought possible with way less effort. And that's really the thing that our clients make the biggest quantum leap, is when they stop caring what anybody else is doing, because they got the problem solved for themselves right in front of them.
Once you've created the solvable problem and you've closed the gap, like, here's the allocation that's going to get me there with the least amount of moves, least amount of effort, least amount of risk. That doesn't mean that you stop necessarily going to events, for example. What you do, though, is you go into it from the perspective of, this is for novelty. In other words, there's things that I do, like I update my Google Sheet, and every day I update in this Google Sheet the performance of all the different funds and allocations and things. Does not change my decision-making whatsoever. There are tools that I could set up that would allow me to automate most of that, but I like doing it. I do it out of novelty. I go to events, for example, I already know the path that I'm on and the outcome that we're trending towards, and that the biggest thing that I could do is change something. Biggest risk, like, we're already trending towards exactly where we need to be in the timeline that we've defined. So if I change something, introduce a new variable, now I've created more uncertainty. So going to the event I'm opting in for novelty, meaning I'm going to listen, enjoy, have some good conversations, maybe build some new relationships. Uh, but it's not necessarily going to change anything that I'm otherwise doing because I've defined the path and the outcome is clear. And that each month, the thing I'm going to do is remove risk, remove effort. Right? That's if I'm performing and going to get there faster, how can I take less risk, have less effort? That means I'm going to have more free time. A lot. And we have to reckon with that. We have to reckon with the fact that maybe we're not used to having any free time and that we might blow ourselves up. So I had my longtime coach, Randy Massengale, share this in my second coaching meeting with them. He said, well, when you get to this final destination or the thing that you've set out, sort of your financial GPS, how are you going to blow yourself up? Is it going to be sex, drugs, or alcohol? There could be other things beyond that, but those are the three that he asked about. Because as you have more time and or you start achieving these things that maybe you didn't think were possible, how are we going to fill that space? Because often that space gets filled with whatever cognitive distortions or human mindset issues. And that's where we tend to blow ourselves up. There's so many examples of that over history, over time, people blowing themselves up. So with that, I'm going to kind of wrap up. So next week, we're going to talk about how to recapture and then reallocate some of your cash. Week 3, show you how to keep more cash. And then week 4, talk about is a thing worth doing, which is really kind of the essence of finding asymmetric risk. Now, some of you might wonder, how can I access replays and other resources and things, tools that we're going to make available to you? By tomorrow, you'll receive an email with access to a syllabus, essentially an online virtual syllabus that have links to all the resources and replays. Make anything you want to add on to that, because you're putting that together.
Yeah, I'll put together a dashboard as homepage. It'll be built like a syllabus. The reason being, part of recapturing the resources is I want to make sure that, or we want to make sure that there is one place. We will do our job. Our job is to make sure everything you need is in that one place. And then your job is to make sure if you need something, you know where to go. Sending emails back and forth, it kills our time, it kills your time. So it's kind of built into the resource, recapturing the hemorrhaged resources. But that you will have access to that by end of day today, maybe tomorrow if this replay takes unusually long to render. I'll send you an email showing you how to access it. I recommend you bookmark it. I will also give you an invite. I'll send an invite from the dashboard itself. And then every replay, every resource we mention, everything that is available will be there. So you don't have to go looking around for it. Again, part of what we do is try to live what we teach, which is recapturing resources, and don't want you to be confused or losing time trying to gather this stuff together.
So the most important thing you can do between now and next week, 1, get clear on what is the amount you need and what is the duration. What do you currently think you have available to invest? And what would you commit to on a monthly basis? What's your current position on those? We're going to help you try and find more and get there faster. It's the ultimate outcome, but have to be clear on this. And the other, would strongly encourage you to journal. That's sort of an ACE card. You study the greats, and they have a consistent practice of journaling because they know that they're subject to all these biases and cognitive distortions. So reflecting on what are ways in which I'm biasing more over closer. In other words, I'm doing a bunch of stuff rather than being intentional about asking the question, is this getting me closer to the things that I want? How am I playing my game versus how am I playing someone else's game? These are self-reflective questions that you can ask and journal about. So I'd encourage you guys to do that. If you want to post a takeaway in Black Diamond or Cert to You Facebook page, that would be awesome as well. And just let us know we're headed in the right direction. Otherwise, we'll get you, like we said, the syllabus with the links and then for all of you, you got a bonus 2 weeks of Q&A. So when we get to the end of this, we'll process questions. One question was, should I be turning in the homework anywhere, or will there be a way to get feedback on the distinctions we make with the homework? Yeah, we will through the Q&A process in the last couple of weeks. That's where our intention is to handle that.
Just stack it all. What I'll do is I will have a, I don't think you need to turn it in. I think we talk about it, but I'll put a Dropbox together where if you want to, just to organize it all, you could just submit it and then it will organize on the back end for you.
Yeah. Yeah. One of the things we're doing right now, and I'll just be, the system of Legions Capital. We learned this from probably a combination of Dr. Jeff Spencer and Jay Abraham, maybe a few of our other friends, is right now we're opening some loops. We're intentionally not closing them. Opening a few loops, that's going to cause you a little bit of dissonance. You now get to choose whether or not you're going to journal and take action on that dissonance and try and close the gap. But we'll be providing solutions to that. But there's a little bit of intentionality about opening the loop.
There's a human mindset champion's mind, and we'll wrap up with this. When somebody opens a loop, it is very tempting to close it as fast as possible. It's like there's a void, and it's really important that you journal and are very intentional about what you fill that void with. Otherwise, unintentionally and also unaware, there's a void, there's an open loop, and we just take the very first thing in front of us that could fill it, whether it's useful or not. So I would just be intentional about, that's why we journal. Say, hey, I got this void, and I want to be very, very discerning about what I fill this void with.
There was one question that just came up that is relevant. If you have any Certainty App questions, you can email support@certaintyapp.com. And that will get to our developers and also make its way to us as well. All right. Well, we appreciate all of you. Thanks for showing up, and most importantly, taking action and getting clear on the things that you want. We will see you next week.
See you next week.